Your money is losing value as we speak. What $100 could buy you last year probably can't buy the same thing today. Inflation is eating away at your savings, and your bank? Well, they're giving you peanuts in return. But don't worry, in this video, I'm going to break down 6 of the smartest investments that will help you stay ahead of inflation, protect your wealth, and even grow it. And trust me, you'll want to stick around till the end, because I'll reveal the #1 investment that the rich use to beat inflation every time. You might ask, Leo, what is the problem with holding cash? Let's talk about the biggest mistake most people make, keeping too much cash in the bank. Now I get it, having cash feels safe, right? But the truth is, it's actually losing value every single day. If inflation is at 5% per year and your bank gives you 0.5% interest, that means you're losing 4.5% of your money's value annually. And let's not forget, banks use your money to invest in high-return assets while paying you almost nothing in return. Instead of letting inflation eat away at your cash, you need to invest in assets that grow in value over time. Let's dive into the first one. Investment number 1, real estate. Real estate is one of the most proven ways to beat inflation. Why? Because when inflation goes up, so do home prices and rental income. Let's say you buy a property today for $200,000. In 10 years, if home prices increase by 5% per year, that same property could be worth over $300,000. And if you rent it out, you're making passive income every single month while your property increases in value. Even better, if you use a mortgage to buy the property, you're locking in today's price while paying it off with cheaper dollars over time. It's like getting a discount on future payments. That's why the wealthy love real estate. It's a tangible asset that makes money in multiple ways. Investment number 2, stocks and index funds. The stock market is one of the most powerful tools for wealth building. Over the long term, stocks outperform inflation and grow your money at an average rate of 8 to 10% per year. That means if you put $1,000 in an index fund today, in 30 years, it could be worth over $20,000, all without you lifting a finger. But here's the secret. You don't need to be an expert stock picker. Instead, invest in index funds like the S&P 500, which spreads your money across 500 top companies and grows over time. The best part? You can start investing with just $10 to $100 today. Investment number 3, bonds, tips, and I-bonds. Now, if you want something safer than stocks, bonds are a great option. When you buy a bond, you're basically lending money to the government or a company, and in return, they pay you interest. Unlike stocks, bonds don't lose value as quickly, and they provide a steady source of income. Treasury inflation-protected securities, TIPS, are especially great for inflation because they adjust with rising prices. And if you want something that directly protects your cash against inflation, I-bonds are an amazing option. These government-backed bonds adjust their interest rates based on inflation levels, meaning your money keeps up with rising prices. They won't make you rich, but they'll keep your money safe while earning more than a savings account. Investment number 4, gold and precious metals. Gold has been used as money for thousands of years, and every time inflation goes up, gold's value follows. The reason? Gold is limited in supply, unlike cash, which governments print endlessly. Looking back at history, whenever inflation surged, gold prices skyrocketed. Owning some gold is like having insurance for your wealth. It won't generate passive income, but it will protect your purchasing power during uncertain times. Investment number 5, commodities and natural resources. Inflation doesn't just raise the price of homes. It increases the cost of goods and raw materials too. That's why investing in commodities like oil, wheat, silver, copper, and natural gas can be a powerful hedge against inflation. Think about it. When inflation goes up, food, gas, and building materials become more expensive, and companies that produce these resources make huge profits. You can invest in commodities through commodity ETFs or stocks of companies that deal in natural resources. It's a great way to diversify your portfolio while keeping up with rising prices. Investment number 6, crypto and Bitcoin. High risk, high reward. Now this one's a little controversial, but cryptocurrency is becoming a serious inflation hedge. Bitcoin in particular has been called digital gold because there's a limited supply. Only 21 million Bitcoins will ever exist. And just like gold, when people lose trust in the economy, they turn to Bitcoin. That's why we've seen Bitcoin's price rise over time, while the value of cash falls. Of course, crypto is highly volatile, so don't put all your money into it. But having a small percentage of your portfolio in Bitcoin could pay off big in the long run. Let's take a recap. If you want to protect your money, don't let it sit in the bank. Instead, put it into number 1, real estate, tangible asset that grows in value. 2, stocks and index funds. Long-term growth beats inflation. 3, bonds, TIPS and I-bonds. Low risk, inflation-adjusted income. 4, gold and precious metals. Historical store of value. 5, commodities and natural resources. Profits from rising costs. 6, crypto and Bitcoin. High risk but potentially high reward. Which investment are you focusing on? Let me know in the comments. And if you found this video helpful, hit that like button, subscribe, and turn on notifications so you don't miss the next wealth building tip. See you in the next video.